Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, Shiraz Mian here with the Zacks top stock videos. Joining me this week is Ben Rains. Ben and I each have picked a stock in the tech sector. I'm not going to steal Ben's thunder and tell you what stock he has picked, but I have Microsoft. And as you could see here, I put together a couple of slides to show you why I like Microsoft. And this first slide, I have Microsoft versus the Meg 7, the Magnificent 7, as needs no introduction at this stage in the market, versus the S&P 500, which is the green line here, over the past year. And as you all know, Microsoft is a card-carrying member of Meg 7, but you could see about 54% gains versus 71.5%. Obviously, as you guys know, Meta Networks and NVIDIA have really been off the charts, and that's what's pushing the group as a whole to that gain. But see how Microsoft has done relative to the market. Now, you could reasonably be wary of considering Microsoft as a legit investment idea at this stage following that impressive gain. And my argument here is that, yes, it still is. If you own it, hold it. If you don't own it, don't think you have missed the bus. There's still plenty of opportunity in the Microsoft name, and that's the core of my argument here. So we had impressive results. I've noted down how some of the analysts covering the stock had impressive and positive things to say about that report. This one comment headline from one of the analysts covering Microsoft really stands out. The analyst wrote, "Nadella delivers a masterpiece that should be hung in the Louvre." Another analyst said, "AI supercharging Azure growth." And these aren't the only analysts that had such positive things to say about Microsoft's December quarter results. I wouldn't give you the details, but it was very impressive and showed the momentum in all of the company's core business lines. AI is the big driver, and it's not a question of who the winner in the AI race will prove to be. It's not going to be a single winner. But of the 4, 5, or 2, 3, or whatever number you think is sufficient, the opportunity is so big that there's going to be multiple winners. And it's quite clear at this stage that Microsoft will be amongst those winners. Copilot conversions is very strong. That's what we saw in the quarterly results, and it's having an impact on the company's entire ecosystem. In the context of what we were discussing at the top, that the stock has had such an impressive run, so obviously the easy gains have now been made, but we strongly believe there's still plenty of upside. So we get into the valuation question. As you could see, at a forward 12-month basis, 33.5 times. No one would call that cheap or even reasonable. We have compared it to the tech sector as a whole. That's 26.9 times. This is a 5-year history. So this isn't the high point over this period, but 33.5, just in absolute terms, looks rich. But that may not be the best way to look at Microsoft's valuation. You got to keep in mind the very strong growth outlook for Microsoft as you contemplate its valuation, and that's exactly what we have done here. It's that same forward 12-month multiple, but now we have adjusted it, keeping in mind the expected growth. And on that front, you could see that Microsoft is trading at roughly 2.1 times versus the tech sector, which is at about 2 times. And it's hardly expensive on this front. In fact, one could, if one was in the mindset of those analysts that we quoted earlier, one would consider it cheap or reasonable, given the opportunity that Microsoft has in cloud, in AI, and all of its core businesses. So this is the crux of the argument I was outlining earlier, that you haven't missed the bus if you never owned Microsoft. And this is something that's very core to how Zacks looks at a stock. What we are showing here is how estimates are unfolding. So look at these two lines, the light blue and the red, and look at the slope of how this curve is unfolding at present. The red, as you could see here, is the 2025 estimates. The light blue is 2024. And as you could see, as long as the slope of this curve is positive, and in the right side, top right side of this chart, then you can safely latch on to the Microsoft story and not worry about much, because the momentum in the company's underlying businesses will drive this stock price momentum, and you should see that in the stock's performance over the coming quarters and years. So I see Microsoft as a core long-term holding, and I would encourage all of you to take another look at it if you don't already own it. With that, I'll pass it on to Ben, who has a very impressive and quality stock that he's pitching. I had that stock in the Zacks top 10 last year. So with that, I'll give it to Ben.
Thanks, Shiraz. Ben Rains here. Today I'm looking at Shopify, which trades with the ticker SHOP, SHOP. Just to let everybody know before they consider buying it, the company does report its fourth quarter and fiscal 2023 financial results on Tuesday, February 13th. With that said, Shopify is now trading at new 52-week highs heading into that report, and it still trades nearly 50% below its all-time highs, even as many other large cap tech stocks break record after record. So let's kind of go through what Shopify does, and then we'll go over to some Zacks screens and Zacks.com to look at some other fundamentals. So Shopify provides what it has dubbed the essential infrastructure for commerce. They've been at the cutting edge of e-commerce for nearly 2 decades, helping companies, small businesses, entrepreneurs, and really everybody else design sites, help with sales, marketing, payments, shipping, and more. And they continue to roll out new and new features. The company makes money from recurring subscription fees and then various add-ons. Shopify grew its revenue at an average between 65%, or an average of 65% between FY17, so 2017 and 2021. That's really every company under the sun raced to get into that new age of technology, which was e-commerce, so retail online. Shopify's days of 60% growth are over, which makes sense as it became unsustainable as it reached closer to $10 billion in yearly revenue and customer acquisitions became more saturated, as I said. More and more people had already joined e-commerce. Shopify made up for that slowing expansion by raising its prices for the first time in nearly a decade in 2023. Plus, it's now committed to the bottom line like many other companies are in tech. So let's take a look at some more of its fundamentals. We're going to go to Zacks.com. So we can see right now that Shopify is a Zacks ranked #1 strong buy at the moment. And as I said, it's reporting on the 13th of February, so Tuesday morning. Now let's take a look at some of our expected results for Shopify. So we're calling for 25% revenue growth from about 5.6 billion all the way up to nearly 7 billion. And this would come on top of 21% sales growth last year. And then we're calling for another 20% growth next year to get up to about 8.3 billion. So it's not like the days of 65% growth are gone and now they're just doing 5% growth. They're still doing 20% growth, 25% growth on the top line, which is really still impressive. And then on the bottom line, this is where Wall Street's really loving this. So they're expected to jump from 4 cents per share last year all the way up to 70 cents per share, and then get up to another $1.04 in 2024. So big bottom line growth. And then we can see that its earnings estimates are trending in the right direction. And then if we go, we can also see that for the last several quarters, they've crushed our bottom line estimates, beat by 60%. Last quarter, 133% in Q2, and then 125% in the first quarter. And now we can take a look, go over to ZRS, and we can see its stock price performance. We can see up massively since its IPO. But as I said at the top, it's worth noting that they're still trading around 46% below its all-time highs. So they're still down 46% since those November 2021 peaks, with the stock now up. Let's see how much it's up over last year. 87% over last year. As I said, it's trading at new highs on Monday, blowing away the tech sector. And then we can take a look at the technical aspects of Shopify here as well. So we can see it finally climbed back above that 200 weekly moving average right here, which is that red line, after finding support at the 50-week moving average a couple times over the last year. So and it's not even as heavily overbought as it has been at some point. So we can see, we'll draw a little trend line here. We can see that at different points throughout its history, it had been a little bit overbought, more overbought than it is at the moment. We can go to, say, let's check out a year chart. We can see that it's finding a lot of support at the 50-day moving average recently. As I said, it's trading at new 52-week highs heading into that report. So with that in mind, you could see a pullback for Shopify at some point in the near term. Its valuation levels are still really sky high at this point compared to the broader tech sector, but it is finally focused on profits, which is a good sign. Shopify also has a really stellar balance sheet, nearly $5 billion in cash and equivalents, and about $10.5 billion in total assets versus just $2.2 billion in total liabilities. It really has an impressive outlook in a key area of the economy that's not going out of style. As I said, it is worth stressing, though, that Shopify could face some selling pressure in the coming days and weeks after its earnings report, as the market and a lot of these tech companies look a little overheated in the near term. So investors either want to ride out that near-term volatility possibility or consider waiting for a pullback to, say, the 21-day or 50-day or even 200-day moving averages in the coming weeks. But overall, if you're a longer-term investor, you don't want to get too caught up in trying to do the market timing game, because that's a very risky proposition, especially with Shopify stock still trading nearly 50% below its all-time highs. So Shopify is certainly worth considering, especially heading into that earnings report on Tuesday. So that does it for me and this episode of Top Stock Picks here at Zacks. Make sure to check out our Zacks.com/promo page for a look at some of our services, portfolios, and more.